Hey, what's going on? Welcome back to Trading Options Network. It is July 11th, and I know I'm a little bit later than normal today. However, didn't really sleep much last night. Pretty tired. Had a pretty slow morning. But here I am. I'm not going to not do it. That being said, let's get into the disclaimer real quick. Everything is solely for educational purposes only and is not the opinion of Trading Options Network. Do with the information what you will, but also be sure to like, follow, or subscribe on your favorite social media platform to stay up to date with Trading Options Network. That being said, all right. So, first thing I wanted to point out is this heat map, okay? If we take a look at it, now in recent days when it looked like it was more 50-50, the top left was more green and the bottom right was more red. It's completely flip-flopped today. Okay. This is interesting to me, especially when the CPI data came out really, really nicely in terms of what the Fed wants to see, what Jerome Powell wants to see. I'm shocked that the market is doing this, but the only explanation that I personally have is a lot of these stocks have been going off so well. And now that we are seeing good CPI data, and technically it's not good, we're in that era where bad news is good news still with the CPI and PPI data. And we have PPI coming out tomorrow. But with the CPI data coming in so dovish, I think what is happening is people are finally getting off of the, technology train where the Nvidias and, the Apples and Microsofts and Amazons and the Facebooks and Netflix and all of them have been going so well. They're starting to think that the rest of the market could potentially start moving back up now that the CPI data is definitely showing a lot lower. I mean, it came out -1. We'll go over it more during the end of the week recap on Saturday. We'll go into it a lot more, especially with the PPI data coming out tomorrow. But that's the only thing I can think of is people are thinking that now that the CPI data is really cooling, inflation is cooling, now is a good time to shake up their portfolios, start taking profits from these bigger companies and putting them into the smaller companies that now have the a better chance of moving up. So that, I'm not going to say it's making me nervous overall, but it's definitely throwing a wrench into anything that we have. Case in point, actually, before we go ahead and get into the trades, let's look at what SPY is doing. So I'm going to get rid of the ATR for right now. Don't need that. Let's change this back to the Bollinger Bands. All right, so I should probably change the RSI to the MACD. That's how I prefer to have it. All right, so again, we got this quote-unquote great number for the market, but the S&P is down 0.2%. Now the Qs, being that they are more tech-heavy, I know I don't show the Qs a lot, but look at this. They're down 1.5% because they are more tech-heavy. So it's really a nice pullback there for the Qs. So we're going to have to see how this is going to play out, especially with PPI again tomorrow. Is it going to cause the market to go down even more? And I would not be surprised, just simply due to the fact that, we've seen decent PPI and CPI data in the past. I was expecting it to come in line. I was not expecting it to be as cool as it was. But nonetheless, it came in a lot cooler. So if the PPI data is the same thing, does the market just continue to sell off? Or again, is this really a sell-off, or is this more of a repositioning of funds in portfolios? I mean, again, that's kind of what it looks like to me. All the things that have been red for a long time are now green, and all the things that have been green are now red. So it seems to me like this is more of a portfolio balancing time frame. And I know I said that the other day as well, but I mean, that's really all I can think of right now in regards to what's going on. But that being said, let's go ahead and look at our trades. We absolutely are not going to be opening up any new trades. But that being said, I did go ahead and roll the McDonald's position this morning. Of course, if you are a Platinum member, you would have gotten that text message to do it as well. And I do like, I shouldn't say I don't like the fact that McDonald's came back as aggressively as it did. But that's exactly what happened. So, am I going to completely abandon this trade? No, because it's still in a very, very nice downward trend. Now, if it ends up going up more tomorrow, then maybe we do abandon this trade, and we're going to have to close it for a loss if it gaps up even more tomorrow. But right now, it's still below the 20, still below the 50. It's actually right at the 20. So, we want to see is the 20-day going to act as resistance right now, and will McDonald's end up going down more tomorrow and then next week? So hey, you know what? I'm not gonna lie. It would have been nice to close this trade when it was at 243.53, but we don't have crystal balls over here. I didn't expect to see this massive rebound off of those lows right there, especially considering that's not even really a support level. If we go back, let's go ahead to do 1 year. All right, so the 243.53 level is right there. Okay, there's no support there. We already broke through support when we broke through the 247 level. Okay, so I was not expecting anything like that, any kind of bounce there. And in fact, if we go to the 3-year 1 day, let's see if I can, that's 243.55. That's about as close as I can get. Again, you don't see any resistance or any support there. You can argue that there's some support around the 241 level. But if we were to go, let me get rid of this little finger guy. If we were to look in here, the 243, let's see, 243.53, right about, 243.57 is about as close as I can get. Again, there's not a lot of support there. But if we go down to the 241, you can argue right there that there was a little bit of resistance at that point that almost turned into support once it did cross over and then had that red bar. But that's literally about the most you can argue. Otherwise, the next real level was around this 230. Okay? Maybe a little higher, maybe between 230 and 232. But that's what I was actually expecting to happen over the next couple of weeks. So again, that 243 bounce, to me, is just random. It's a random bounce, and sometimes you just gotta, you have to take those. Oftentimes, where's my 3? There we go. Ooh. Where's my 6 one? There it is. All right. This is what I wanted. All right. So again, oftentimes you have to take these bounces as just nothing more than a bearish rally. Okay. But again, if it starts continuing to go up, maybe because the CPI and the PPI data really is starting to have a lot of these companies or portfolio managers reposition their assets, and they start putting it in McDonald's, and McDonald's starts getting a lot of buyers. It's possible. Also, look, we did have that big, nice down day on, that was today's Thursday, so that would have been Tuesday. That volume was very high still, okay? Yet, this volume, when we had a nice up day yesterday, while it's still over average, it was definitely not nearly as much as it was on Tuesday. We'll see where the volume ends today when the trading day is over. I mean, it's only 2 hours into the market. It has a decent volume bar already. So, for me, this is one we're just going to have to kind of watch over the next couple days, and maybe we will abandon the trade. I don't know. But, it does seem to want to just continue to move higher right now, as you can see. So, I guess good for anybody who was holding calls on McDonald's, even though I think that was kind of crazy. It was a bearish ballsy play, considering how bearish the stock has been lately. But again, look what happened over here. went up and then it just completely fell apart again. It could easily roll over again. And then the next week we're back down to that 245 level. I would not be surprised at all if that's what happened. I would actually be more surprised if it continued to go up and challenge that 50-day moving average. That's what would actually surprise me more, as weak as McDonald's has been. And not just McDonald's, but the entire restaurant industry in general for the most part. So if we go back over here, let's see, consumer cyclicals right here, McDonald's. So, if we were to look at the Starbucks, obviously Chipotle had that, that split 50 shares for one the other day. So that one kind of was bullish a little bit more than any others really. But if we go to Starbucks, Yum, can't even remember which one that is. What is Yum? It's just Yum Brands. Okay. And we look at these. I mean, that is not a good a bullish chart. And I do apologize. I'm so tired right now, but I'm trying to get through this for you guys. But that is extremely bearish. Okay. This one's actually due for a bounce. If we look at Starbucks, SBUX, that's right. This one's even worse. Okay. In fact, this one's barely participating in this bounce right now. A gap down on earnings last quarter. Let's see, earnings is, where is it at? I know it's in here somewhere. Oh, there it is. April. Oh, that's weird. It still shows the last one. Well, we can assume it's going to be sometime in the end of July. But I would not be surprised if that completely goes down more, okay? But Starbucks has been terrible. So a lot of these fast food restaurant chain types have been pitiful. Let's see, if we go ahead and look at, again, I'll look at Chipotle here in a second, DRI. Let's look at DRI real quick. Darden Restaurants. Again, it's participating in this little jump here, but it's been so, getting crushed as of, the last few months that it's due for this bounce. So again, do I expect McDonald's to just start transitioning and becoming a bullish stock? No, not at all. So that's why I don't want to abandon the trade yet. We had to roll it because obviously, it did bounce from midweek. But I still like the chart overall. So we'll see what happens from now until next week. And again, if it just continues to move higher and just doesn't want to slow down, then maybe we have to reassess it and possibly close the trade. But overall, I'm not too worried about it. Chipotle, CMG, I always forget what it is because it's not like the actual word. As you can see, Chipotle has only recently been, on a downward trend and basically since the split for the most part. I guess you can argue that it started right before the split. But again, it was a 50-for-1 split, one of the biggest of all time in the market. But, up until then, it was just going off. That one was one of those outliers that just it didn't seem like it mattered what the sector was doing, what the industry was doing. It was doing its own thing. But again, since it split, I think people now are kind of over it, and it's been coming back down. It's slightly participating in the bounce as well right now. And then it has earnings coming up here July 24th. So, again, going back to the McDonald's trade, I'm not going to just abandon it because it's having a couple of good days in a row. That's going to happen. We are playing a spread. The reason we play spreads is to protect ourselves from stuff like this to happen. Okay? And it is what it is. But that being said, let's go ahead and look at T-Mobile. Okay? T-Mobile's looking great for us right now. Still over the 180 level. So right now, if we go over here, we are now up $929 additional since we rolled it. $839.50 since we rolled it, which between the original diagonal and the current vertical, that gives us a profit of $2,300 on that trade. Yeah, McDonald's is kicking our butt. I know it's hard to look at sometimes, but again, I'm not worried about that. SOXX. Okay, let's go ahead and reassess this one really quick. This one is not cute at all. Big red bar. Big red bar. Oops. I forgot I took off the finger tool here. Oh, I hate how it does that. It like resets this. I like it at 10. I don't know why it does that. It just resets it. Okay. So that is an ugly, ugly bar. Okay. But again, we do still have until next week for this before it expires. Okay. So yeah, we're down 2.5%. And even though if we come back over here, it's showing we have a loss of $700 for the day, we're still up 640. Okay. We're still up 640. Will this probably go down a little bit more the rest of the day and maybe even tomorrow? It might, I don't know. But if it doesn't, if we finish at this level, we're still going to make a nice profit. Okay. If it closes around the 258 level, I don't need this to be a max gainer. I don't. I would love it to be, but I don't need it to be. If we go ahead and do the math really quick, if we bought in at 520, which means our break even point is 255.20. Okay, so as long as we're over 255.20, then we are going to be profitable on this trade. And if it closes, again, where it's at right now, we have 4 of them. It'll be about a $1,200 gain because it'll be about $3 over. Be $350 roughly over our break-even point. So you multiply that by 4, that's actually a $1,400 gain. So again, even if all it does is move sideways from here on out, we will go from now it's probably those bid-ask spreads are being a little bit silly right now, but we went from 450. We would still profit another $1,000 if it just moves sideways from here on out. So again, I'm not worried about it at all. We're still in a good spot. So don't be tripping about SOXX. And then finally COHR, Coherent Corporation. Again, same kind of thing as the others. We are seeing a little bit of a pullback here, but I'm not worried about that because it's still a great chart. We still have, 36 days till expiration, I believe. Yep, 36 days till expiration. So, yeah, we're down right now. I'm not worried about it even in the slightest. It's looking great. Pullbacks actually will help this overall in the long run. Okay, yeah, don't get me wrong. I love to see this just go up for no freaking reason whatsoever to like $85, $90. But it looks to me like it wants to almost slow down a little bit, consolidate, maybe a slight pullback. But it is, we've had this huge, huge uptrend. And if you go ahead and, there we go. That's what I wanted. Boom. And boom. Okay, we have this little channel right here. My guess is it'll eventually break up. More likely it will break up. Doesn't mean it will, of course. But the chances are higher that it will break up, not down. We just have to wait and see what it wants to do. But again, we have 36 days. We don't need this to go to, 85, 90 level. Going to be great if it does. If it goes to 80, we'll be nice and profitable. That's all we need. It doesn't need to go up a ton. Okay, it does not need to go up a ton. I will say, if I go ahead and put on the ATR here, I'm actually going to pull it up on, not this one. That's how tired I am. We go ahead and pull up the ATR for it really quick. I can guarantee you that ATR is going to be going up because it has been moving quite a bit in recent days. So ATR. All right, I shouldn't say it's been going up, but it's been ranging quite a bit. Okay. All right. Sometimes I look stupid. I forgot that one big day is phasing out. Okay, so it's been going down. But nonetheless, I mean, these last couple of days, you can't argue, have definitely seen and been more volatile with this gap up and this. maybe not so much yesterday, but then today when it continued to move up higher, now it's selling off. I mean, those are big, moves. $2.68 is the ATR, but so far today, it's been a high and a low of almost $3 already. And again, we're only a little over 2 hours into the session. Okay. On Tuesday, we had 350, so again, obviously higher than the current ATR at 268. That's the average of the last 14 days. So it's being a little bit more volatile than its ATR would suggest. So we'll see what happens. Again, going back over here, I like the little channel it's in right now. To me, it's just consolidating with this decent volatility, and ultimately it will probably break up higher. Again, we have 36 days for that to happen, so we're good here. With everything happening in the market right now, there's zero chance I'm going to be opening up any new trades because everything is flip-flopped. All the bulls are pulling back. All the bears are having a little rally. That is usually a good sign for new positions in the future because, like NVIDIA, for example, if we go ahead and take a look at NVIDIA, all right, it's a big red day. It's right at that 20 right now. So if we can get confirmation in the next couple of days that it wants to start moving higher again, then that's going to be a great position. We don't want to buy at these higher levels when it's at the top of the Bollinger Band, for example. We want to buy on it when we have better opportunities. And right now, if you ask me, Apple, Microsoft, if I look at all of these right now, I guarantee they're all going to be showing better opportunities to get into a new position. Apple is one I was saying. I think I just said it as recent as yesterday. We're not going to chase Apple. We're going to wait for it to have a nice pullback and then get into it. And that looks like exactly what's happening. So even though our trades may be looking a little, sad today, to me, all it's doing for us, is giving us better opportunities in the upcoming future to profit. Microsoft, we look at that one. Okay, again, it's having a nice pullback. It's right at that 20-day. So, again, we're right at that 20-day right now. And, so what? It's down 3% today. It could be up 5% tomorrow. Now, if that happens, it might be hard to, again, start chasing it. It might be one of those really quick, pullbacks, and you can't really time it, and it just starts going up right away. But do I foresee that happening? No, not with PPI tomorrow. And in general, the market overall is due for a pullback. Again, if we go ahead and look at the S&P really quick, again, it's been doing nothing but going up and up and up and up and up. That is not a healthy pullback. That is a mediocre pullback at best. A healthy pullback is usually about a third of the gains. A third of the gains here, if we go back and look at the bottom here, from 409 to 556, we'll call that $60. That'll be a $20 drop. So now a healthy pullback would be actually around this level. No, I guess not that far. I didn't do my math right. I'm sorry, I didn't even do my math right. If it was at 410, 556 is $150. So yeah, right around that 500 level would be a healthy pullback now. Back when we had that pullback just below the $500 mark, okay, in mid-April, a healthy pullback at that point would have been closer to around 490, 480, and that's actually what I had projected this to go to. If you were following me back then, I was expecting to see this pullback around to the 480 level, but it never happened. And I've talked to other people, and a lot of them all agree that the higher we go, the bigger the pullback is going to be. So Again, are we starting that today? I mean, who knows? We don't know. All I can say is I am going to be patient. I'm going to see how the market reacts to the PPI tomorrow, since it's obviously reacting kind of poorly to the CPI today, which is, again, it's kind of surprising. But until we get a good, clear picture of what's happening, this could just simply be a pullback, in which case, again, it's going to give us some great opportunities for to add some more bulls. And if it does ultimately turn into a large, deep, healthy pullback where we're going to pull back, a third of these gains, then as soon as it shows us to get more bearish, then it's going to be a great opportunity to get bearish. So this is a setup right now. I think what the market is doing is it is giving us two things. It's teaching us to be patient, one. And two, it's going to give us a phenomenal setup to add trades maybe next week or the week after. So we may be holding cash for a little while, and there's nothing wrong with that. There's nothing wrong with that at all. We want to be smart traders. We don't want to be gamblers. So that being said, I hope everyone has, learned something. Again, I'm still happy with where we're at. We're still up overall, over 2% in the last week and a half in the portfolio. My goal is to be up about 1% a week, and we're there. We're past that. Okay, so technically speaking, we can even pull back more, and we'll still be, I'll still be happy. But nonetheless, I mean, you can't have a green day every single day. You're going to have some red days, and so what if we're having a red day today? It is what it is. We can't change that. All we could do is just let it happen and continue to watch our positions. And as long as we are monitoring our positions and they are looking okay, then I'm okay with that. So talk to you in a few hours, guys. I hope you have a great rest of your morning. Talk soon.